All right. Well, I want to welcome everybody to the first day of fall here on September 22nd. But did you know that according to Walmart and many other retailers, the holiday shopping season is here? Walk into your average Walmart and you'll see the stocking shelves. The shelves are getting more and more stocked with holiday merchandise. And so I thought it was time to get ahead of everybody else and start talking about holiday patterns. So when I look at the money calendar, and I did a live session of this last week, so I just want to spotlight some of it. When I look at the money calendar and I fast forward into October, that's this quadrant, November, right in the middle, and December over on the right-hand side. You know the one thing I see for the world's most popular stocks, the ones that I track? Mostly green. In fact, I see every day on the calendar with the exception of one, which is December 1st. Green. And even December 1st has more bullish opportunities than bearish. It's just not as many as the rest of the calendar. So going into year's end, this tells me that popular stocks, liquid stocks are all showing signs of wanting to move higher in the last quarter of 2025. So what does that got to do with holiday strategies? Well, we have several holidays we're going through. All right. Take a look at the big three. That's Thanksgiving, Christmas, and New Year's that we will obviously touch as we head into the end of the year. There are 10 market holidays that I follow throughout the year. I collect data on those holidays. I look at and research that data. All but Juneteenth have data that I use to evaluate for patterns. The theory is that the markets are stronger a week before the holiday. And a lot of traders like to come in and like to buy 1 week before and sell literally the day before that holiday. Let's look at to the upcoming holiday pattern that we have happening, which is the next one I'm looking at right now is Thanksgiving. You might be saying to yourself, why in the world, Tom, are we looking at this when Thanksgiving is 2 months away? Well, there's a little bit more that I want to share with you other than what's happening the week prior to Thanksgiving, because there are things that are happening today. So the trader's plan is that they're going to wait until the week of the holiday. They're going to buy that ETF, whether it's SPY, DIA, or QQQ, or something else, and they want to buy it a week before, and they want to sell it right up to the holiday. The results, however, that I see doing that 1 week trade are really, they're mixed, right? This is an example of me using a scanner I have called Money Holidays, where what I'm doing is I'm taking a look at the last 10 years prior to the Thanksgiving Day holiday, where we buy 5 days before and we sell that day before the holiday. And although we're getting 70 to 80% results, true, what we're not getting is return on investment. We're getting fractional returns on investment of anywhere from 0.27 to 0.86. So even though we do have a little bit of an edge here, it's not much of one. But if we increase those numbers, if we back off instead of looking at 5 days before, what if we looked at 30 days before or 40 days before, even 50 days before, knowing what we know right now with that last quarter of the calendar? Let's work in something that works again with holidays. What we found was that even though the 1 week before was really kind of bad for the ROI, if we increase from trading weekly to trading monthly or even more than monthly around these holiday patterns, it significantly increases the results in the ROI. Take a look at this. So I took the Money Holidays, and all I did this time was I put myself 30 trading days before. All right, 30 trading days before. And in this case, even 14 days after gave us a 7.5% average return on a 90%, 9 out of the last 10 times that we were in this period between now and say mid-December. And then if you take a look at the next line, 30 days before, 15 days after, 7.5. So if we take just that top grouping, it's basically telling us, get in 30 trading days before. That's pretty much right now, folks. And then getting out about anywhere from, say, 12 to 15 days after. That puts us around mid-December. So a longer-term pattern has been born off of a shorter-term seasonal type of pattern that a lot of people trade. So what I want to suggest is that we look at DIA today, September 22nd, because between September 22nd and about mid-December, what we're seeing is we're seeing an increase in the Dow of somewhere around 6 to 7%, depending on what you're looking at, whether that is going to be today or tomorrow or Wednesday, and whether we're looking at the 15th, 16th, 17th, 18th, 19th. Anywhere in that area, we're seeing 6 to 7% or more returns, and that's just on the ETF itself. Now, how do I get all this information? Like I said before, I scan the top 325 stocks and ETFs. I look at a minimum 10 years worth of data, and I look for patterns that are consistent. If you take a look at how I rank stocks like the Dow, that's what I'm doing. I'm going out and I'm looking at how long these trades are going to last, what their returns are, what their accuracy is, when's the last time they actually had a loser, and I also want to rank them by pattern consistency. I call that my power meter. For the Dow, it kind of ended up looking like this. From now to December 15th, 90% historical win rate. The only time this lost money was back in 2018. All right, every other year, we saw winners on the board for the Dow. So my pre-holiday action plan is that I'm looking at Q4. I'm looking at that 6 to 7% projection between September 22nd and mid-December. That's going to put the DIA somewhere around 490 to 500. So we're already, we got two crucial pieces of information we need to be traders. We have the exact time frame, that optimal time frame that this pattern works. The start date is now. The end date is somewhere around mid-December. December 15th is what I have. And I have a projection. I have a projected time. I have a projected price. That's good because as a trader, you could go in and you could buy DIA today, and using the information that I shared with you, you vet it yourself, and if you like it, you buy on the start date and you sell on the end date, and that's what we look at for the actual pattern itself. But we could buy the DIA and go to year's end or go to mid-December. 463.22. I just put this up on the screen. That's $46,322 for 100 shares of DIA. We could buy the calls. We could buy the spread. What makes the most sense? All right, so I'm going to show you snapshots that I put up just before the hour, and then we're going to go in and we're going to look at placing a trade with this. So the snapshots look like this. So in the last hour, I was looking at this, and the 465s. This is the 465 calls. Was just an idea, $13.80. So $13.80 gives us the ability to rent. All right, we're renting the DIA between now and when? December 19th. This is the December 19th option. So a little bit farther past the pattern, but that's exactly what I'm looking for. So if I were to buy these, we're talking about something that could be, again, it's a lot less than $46,000 and change, but still $1,380. So that's one area we could go in, right? Another area we could go into is we could look at the call debit spread, and the 480, 490 is something that I was looking at as well. We're going to look at both of these live and going to go in and place a live trade together. So let's shift gears. Let's go over. I'm actually going to go right into my Robinhood account with everybody here. We're going to take a look at this trade right now. So with the Dow trading pretty much flat for the day, right? Open lower, moved a little higher, trade a little flat for the day. This is perfect. Flat means that we're going to get better efficiency in the options. It's a perfect time to hook up a longer term trade. Again, I'm not day trading here, so I'm not in any big hurry to do anything, but I definitely don't want to buy the actual asset as a trader when I can come down here and trade options. So if I click on trade the DIA options, that immediately brings me to the call options that I'm looking at right now. Now, the first thing I need to do is I got to go in here and change this time to suit the time I'm looking at. The December 19th are 88 days to expiration. Now, if we take a look at where we are, the 465 calls, which are the closest to the money, are still trading at 13 around $13.55. So if I were to click on that and I wanted to buy that at $13.55, you can see what that's going to end up costing, right? There's my 465 call, $13.55. And I'm going through and I'm saying to myself, well, it's going to cost me $1,355 to buy that position. Okay, so I could go out and buy that position right now. What I got to do is I got to ask myself, is it going to make money if we get to the projected price that I'm looking for? So if I'm looking for 490, what's a 465 call going to be worth at 490? That's going to be worth potentially 25 points, because you take 490 minus 465, that's 25. If I pay 1360 for something that's worth 25, I'm going to make the difference. You subtract 25, which is the difference between strikes, minus what you pay for it. That's not quite a double, but that's okay, because I'm already taking off. For me, when it comes to ETFs, I'm happy with a 50% return. Now remember, with the DIA, we could have gotten, we're looking at that 6 to 7% return if you buy the DIA. So if you could get 50% and take at least half of that trade-off for a 50% gain, you have really outrun the DIA itself, right? So if that's the case, if I were buying it at that 1355 or 1360 area, then I'm going to be looking to take off. I'm going to look to take this off somewhere around the area of 20 to 21, whatever that 50% return would be. But that's not the trade I want to take today. I'm not saying it's not a good trade. It makes sense. But if I want something under $500, then I got to look at spreads. Spread gives me the ability to buy a lower strike call, sell a higher strike call in the same realm, but do it for a lot less money. Here's how I set it up in Robinhood. So I'm going to click on Builder, and I'm going to build myself a vertical spread. It's called a call debit spread. This is what I'm looking to do. So I'm going to click on the call debit spread, and I'm going to look at DIA with a December 19th expiration. The other thing I like to do is I like to come over here where it says width, because the distance between strikes, I want to make that 10. So that's my 10-point strikes. There's my 480, 490 right now. So if my projection is that we're likely to get to 490 by mid-December, then use that as the sell side. The 480 would be the strike long. The 490 would be the strike that would be short on. So what's that going to look like? Well, that's going to look like something that's going to cost about $2.88. I actually like this one for $3 or better. You know, this is part of something that I'm doing starting tomorrow that many of you in here are signed up and going to be a part of. And so this is something that starts on September 23rd. I call it my 3-month money calendar mentorship. 3 months to 300% is what we're calling it. Includes live sessions, and we're going to be doing sessions tomorrow, Wednesday, Thursday. And then that's just the beginning of the 3-month mentorship. Also includes software scans, trade alerts. And this is actually, we're doing this for better than 80% off, but that ends today. Again, I call it my money calendar 3-month mentorship, 3 months to 300%. And we start tomorrow. So hope you guys can all join. Thank you for joining me today, and I will see you soon. Bye now.